I mean, it is our proof of concept on the deposit token has shown that it would be perfectly fine and it's absolutely legal and safe, legally safe to issue deposit tokens. So no problem from that side. Now, of course, a deposit token, as any transfer with as any bank transfers today, they are settled via the Swiss interbank clearing, the SIG system that is put onto the Swiss National Bank. So, and here, as long as the Swiss National Bank is not blockchain ready, then there's no point in constructing or in issuing a deposit token.
So we need to talk to some of the people over there at the Swiss National Bank to move them along. I just saying. So that would be the big blocker, you think, generally for
it's
banks?
It's not a blocker. I think we're in contact with and we have been in contact with the Swiss National Bank, and they have also had a lot of speeches and publications, and they are also involved in the BIS Innovation Hub prototypes and the projects. So I'm very happy to observe that the Swiss National Bank is ready and willing.
Hello and welcome to another episode of RULEMATCH Spot On, the only podcast focused exclusively on the institutional crypto and digital assets industry. I'm your host, Ian Simpson, and if you want to know what banks, hedge funds, asset managers, and others are doing in crypto and digital assets, and more importantly, how they're doing it, this is the place for you. My guest today is Martin K. Hess. He is Chief Economist at the Swiss Bankers Association and has been in charge of their economic policy unit since 2010. He's been involved in various initiatives and projects related to crypto and digital assets, including stablecoins. Previously, he was head of international finance and financial stability at the Swiss State Secretariat for International Finance. He's also a lecturer at the Swiss Finance Institute and the University of Applied Sciences and Arts, Northwestern Switzerland. Martin, welcome to RULEMATCH Spot On.
Thank you, Ian, for having me here. I'm looking forward to it.
So, Martin, you're Chief Economist at the Swiss Bankers Association, and for most of us, probably this organization sounds self-evident, an association of Swiss banks, but I think there's probably a little bit more to it. And it would be interesting to understand what the association does, what it focuses on, and maybe why it needs a chief economist, what you do, actually.
Yes, thank you. Thank you. Yes, it's the Swiss Bankers Association is defending the interests of banks to make them perform, to be competitive in the market, and it all boils down to framework conditions. And there are some regulatory, legal framework conditions and to some economic framework conditions. And so my duty is to analyze the economic side of the framework conditions. Of course, they intertwine also with the technological side now with digital assets or with digital money. But yes, we analyze many things. Is the Swiss franc too strong? How is the policy of the Swiss National Bank? Is it well defined? And what are geopolitical risks, for instance, for the Swiss banking sector?
Mm-hmm. So many of those things, or some of those things, we'll be touching on. I think it's quite interesting because we've had several banks on the podcast, so foreign banks, JP Morgan, Swiss banks, Zürcher Kantonalbank, Signum, Merki Baumann, Julius Baer, and so on. Each of them have their own perspective on crypto and digital assets, what they do or what they don't do, but maybe kind of from a higher level, from the perspective of banks in general in Switzerland. Can you tell us what is the general feeling or attitude towards crypto and digital assets among Swiss banks?
Yes, I've followed this now for a decade, and I'm very positive because banks in Switzerland, they are well known for their services to their customers. And Switzerland is, according to many indicators, the leading country in terms of innovation worldwide. So I'm very confident that these two instances, they can be matched together and will be fruitful in the future. Now, interestingly, over all this time that I have followed this topic, the banks have moved from saying, oh, this is an interesting topic to, oh, this is an important topic. As soon as the word important is on the table, then it's a call for action. And that's what I hear now more and more. And that makes me very confident.
Mm-hmm. I mean, in the meantime, we have at least 40 banks, if we read some reports, probably more by now, doing some kind of service, some kind of business in crypto and digital assets. That has put Switzerland quite at the forefront. But we'll talk about some of that and how that's developing. I mean, crypto is one thing, Bitcoin, Ethereum, and so on, and that's maybe a business interest from Swiss banks, an area where they can make money, where they can serve clients. I remember speaking to Zürcher Kantonalbank, where they said, quite plainly, it was a matter of keeping assets in our bank and not letting them go somewhere else. But probably we all know that crypto is just the first step, right? It's just a kind of a gateway towards tokenized assets, potentially decentralized finance, on-chain finance. Is that kind of the perspective more broadly from Swiss banks as well? This is just one step or one angle of things?
Yes, I think this is a correct view. I mean, what is banking? It's mainly about borrowing and investing. Nothing else. Mm-hmm. I mean, there are some services around it, many important services, but then it's about processes and it's about business models. And here it is very important to see that in a competitive market, you need to be on top of it, and you have to serve your clients. Otherwise, the market will sanction you as a bank. So I think this competitive environment is really the fundament of innovation. And of course, there are some costs to it. Regulation, of course, we as a banking association, we always point to the cost of regulation. Of course, certain amount of regulation must be because it is also an anchor of trust. But basically, we are well positioned to perform in this market.
Mm-hmm. And over this time, you mentioned a decade that you've been following the topic and having conversations, I'm sure, with banks about crypto services or about the bigger picture of digital assets, tokenized assets. Can you give us kind of not a checklist, but kind of some of the bullet points of things that have come up, reasons maybe the banks didn't want to do business in this space, or reasons that they finally decided to do business in the space? What were some of kind of the fears or feelings that they might have had vis-a-vis this new field?
Yes, I think the most important thing is having the mindset right of the decision makers, because ultimately it's their call to take capital and invest in some innovative structure. I think maybe there are two points where you would not take up some follow-up work. One is regulatory uncertainty. I mean, banks per se are very risk averse. Mm-hmm. It is really sanctioned. The sanctions are high or are really important, and the cost of the sanctions are so high, you would not be willing to take a risk that maybe a non-bank is willing to take on. And the second one is not each use case is also a business case. Of course, that depends on the individual bank strategy.
Mm-hmm. And so they've been analyzing these things and so on and so forth for years, and obviously these ones have now come into the market with crypto. When it comes to digital assets, tokenized assets, not so much yet. I mean, there have been different things, and we'll get on to some of the projects, Sandbox, POC, and so on. Is there anything from a bigger standpoint, even market infrastructure standpoint, besides the regulatory part, which of course is a clear given, anything that is still missing that banks are like, well, if this came along, we could do this and this and this?
If you ask me about a certain piece of software, about a certain piece of hardware, I think it's that the banks are better positioned to tell what's missing. I don't see. I mean, when framework conditions are there, everything goes from it by itself. I think an important point in this whole topic of digital assets, of digital money, is that it's not just a simple business model of a particular bank, but it's the whole ecosystem. I mean, banks are more and more relying on third parties. I mean, cloud services was one of the Swiss Bankers Association's early digital topics. Then the central bank. Is the central bank? Does it deploy central bank money on the blockchain? Yes or no? Then the authorities and what's going on abroad. So I think. If something is critical here for success is to move and to evolve the whole ecosystem in sync ahead to stay ahead of our competitors.
And as you mentioned, probably, some of those things are the base layer, the infrastructure that can serve all banks, right? Because banks may have one use case or the other, but then if they're going to interact and if it's going to be a bigger market for things, then I'm sure there are some rails for transacting, trading, settling, some of those things, digital money from the central bank that are still going to be necessary on a big level for an entire ecosystem to develop.
As long, I mean, this is the very nature of banks. They're centralized institutions. We are not talking about DeFi and decentralized finance. We are talking about centralized in interacting actors, and this must be according to certain rules and according to certain also infrastructure. I mean, even today, each transfer, traditional bank transfer, has to go through the central bank, the Swiss interbank clearing. And of course, if the nature of that type of money changes, of course, the underlying infrastructure must change with it.
Is this something that banks fear, or are they excited, interested in the possibilities of it? I mean, just kind of in general.
No. I think they're very much welcoming ways to remain competitive. Of course, each bank can just spend the Swiss franc once, and it has to decide on which project it wants to spend it. My fear is rather the contrary. Is like people or uninformed people who take decisions and to across the board just cling on to the status quo. I think the biggest risk of this is non-action. I mean, you can take an informed decision to move, but you cannot take. And you also can take an informed decision to stay, but you cannot take an uninformed decision to stay, because if you don't do it, others will.
And that's the beauty of competition. And speaking of competition, again, we've had some of the banks that were faster in the space, also Swissquote, and not to forget them as well. There's maybe a few speeds. Smaller banks have a bit more of an agility. Bigger banks, without mentioning any names, are a bit slower. Is this dynamic, do you think, changing or going to change? And what does this mean for the overall kind of dynamism of the Swiss position globally?
I think it's normally and understandable that banks move at different speed, because each one has its own business model. So you can expect to be to have 200 banks at the forefront. Many banks are foreign banks, subsidiaries of foreign banks where where the decision on what to offer is taking abroad, is being taken elsewhere. You have regional banks; they are just their bread and butter business of lending, savings and lending bank. So, of course, here you have different speed, but I would not be worried about this different speed. Now, you said you have these small speedboats and the large tankers. I think to really change or to really move ahead in this as a Swiss financial market, the big ones also need to be on board. I mean, I cannot imagine just to have a certain small number of banks issuing a new type of digital money, for instance. I think there needs to be a critical mass of banks that push the whole market ahead.
Mm-hmm. And yeah, probably those bigger players, the big tankers, as you say, are probably more risk averse. They're probably waiting for some developments, maybe even waiting for things to be better developed closer to home so that they don't have to follow the path of some other banks and go use foreign or different providers outside the country. We know how it has been in the crypto space in the past. But then when you have, Swiss services and so on, that perhaps gives them more peace of mind. Peace of mind also comes, of course, from regulation. And we know about the Swiss DLT Act, passed into law in 2021, kind of put Switzerland in the pole position, so to say. Now we have MiCA from Europe, which is the big brother next door. Is this now going to put a bit more pressure on the Swiss market, on Swiss banks, potentially, that there is now legislation in place in this big market next door, the US as well? How do you think that might affect their speed and their attitude towards things?
I don't think it's a pressure. I mean, whenever there is law enacted, it also gives it makes it easier for you to deploy a certain product. It gives you legal certainty. So in some way or another, this is important to have legal certainty, because if there is no law whatsoever, you never know whether what you are doing is legal or not. Now, of course, the Swiss DLT Act, I think it's worldwide known as a masterpiece. I would guess it was early, and it was just a couple of articles being changed in the law, whereas other laws for instance, the European Union, I mean, there are dozens of pages, rules-based.
Many pages, yeah.
and of course, this is also very costly to comply with a big and rules-based law. So I think we are still happy with our DLT framework.
Mm-hmm. Have Swiss banks or the Swiss ecosystem taken advantage of the DLT Act, really? Or have they maybe in some ways, I hesitate to use the word squandered, but at least not explored all the possibilities in full yet?
I think these, of course, you could do always more and faster and better. No doubt about this. But I think it really was also a wake-up call that here is an opportunity. And I think some of the banks have taken up the opportunity, namely the banks that put this as a strategic decision, and others didn't, and voluntarily so. So no problem about this. I could even imagine a bank going out to the market and say, hey, we are the least digitized bank in Switzerland. You know, we have it down in a bunker, a standalone offline computer with an Excel sheet with the data.
As a USP, right?
Yeah, as a USP. And then, of course, they would say, hey, are you willing to... We are looking for customers that are willing to trade a little bit less user experience against less attack vectors on a digital rail. I mean, something like this. It doesn't exist, but if this is a strategic decision, then it might work out.
And so, and from the association standpoint, I mean, you've obviously followed that development, the DLT Act and so on. Has anybody, whether in the association or more generally among banks, sat down and thought kind of from end to end what this could look like, either from a risk management or from a, getting ready for disruption, or from an opportunity perspective, how that could totally change the entire value chain for banks with tokenized assets, securities on the blockchain, as you have under the DLT Act, even, digital money issued by banks, so commercial bank digital money. Has anybody kind of seen that in the bigger picture and thought, this is how it could go?
Yes, we have analyzed this as a whole, but maybe our work then on the ground was more or less sequential. So it was a sequence of papers, of analysis that we have done, because it's very hard in this environment to just to take a white sheet of paper, the sheet of white paper, and just draw up where you want to land. I mean, this may be done by an individual bank, but there is probably not such a thing that is working then for all the banks across the board. Then it could not be precise enough.
Okay. And probably some banks have looked at that internally. I can imagine the bigger ones, the UBS and some of the others.
Yes, maybe, I hope so.
I hope so, right?
We all hope so, yes.
If we're talking systemically relevant banks, we sure hope that they have a picture of the present and obviously the future. Just going back to the DLT Act and then Europe as well with MiCA, I mean, there are Swiss banks, of course, that also operate, outside of Switzerland, and would then fall kind of in MiCA area in Europe and so on, those in Germany, France, and so on. Do you know how banks are thinking about their how they operate under MiCA or vis-a-vis MiCA in the next phase?
I don't know about individual bank, but I think this is all about our relationship with the European Union. I mean, there is a Swiss law, there is a European law in European Union, and then if you want to get into the market, either you have equivalence, legal equivalence. Of course, that's what the Swiss Bankers Association is fighting for. We have different rules, but to the same effect. Or you have to comply with the other rules, but still it's optional. So those who do not want to enter those markets do not need to adopt the cost. So it's beneficial in any way.
But then, as I understand anyway, a Swiss bank would need a MiCA license for operations in the European Union if they are going to go and offer their crypto services, trading, custody, and so on, right?
Yes. I mean, if the law is as it stays, I expect it to change over time, because developments are still going on. I mean, we don't know what will happen to stablecoin. I mean, there was a complete switch in the attitude of the authorities, but still, yes, as it stands today, it would be the case.
And on the topic of equivalence, I mean, this would be a paradise, right? A perfect world. Is that the aim, do you think, from the Swiss side, to make Swiss laws equivalent to MiCA and then say to Europe, hey, we're basically at the same level? Or what is the state of play or the attitude right now? This
is exactly the case. That, I mean, when let's take the example of wealth management. We have been lobbying for decades, to tell the European Union, hey, our laws are equivalent. Why don't you let us in? I mean, of course, Switzerland is a small open economy, and therefore needs access to foreign markets. And it's our duty to make this asset as least costly as possible.
But obviously you can't force anyone, right? So, yeah.
It's a choice. It's a political choice whether we want to adhere to the European Union or the European Economic Area, or having bilateral relationships. I mean, this is on a different level, and of course, this will have also this has an impact on on the financial sector.
Mm-hmm. We come now on to probably the hottest topic, and maybe the one that our listeners and viewers have been waiting for based on the title of the episode, and that is stablecoins. There are some new proposals in the works from the regulator about stablecoins, especially towards banks. Do you think some of that was motivated by a desire to be equivalent to MiCA, since MiCA does deal quite strongly with stablecoins as well, or how does that fit into the picture?
I think it has. I mean, Switzerland, we always want, and I think this is across authorities, central bank, supervisor, and of course the industry. We need first-class framework worldwide. And as it stands now, it is virtually impossible to issue stablecoins, to issue scalable stablecoins. Now, until a few years ago, I would have said, well, but, it's a risk. Stablecoins are risky. Authorities do not want it. But this has changed. I mean, with the Genius Act, with MiCA. So somehow this has moved really from a perceived unacceptable proposition. We all remember Libra, how this was just simply
no way, Jose. Yeah.
It's no, and then you see the central banks that say, "Whoa, this is a risk for financial stability." The Bank for International Settlements in Basel saying stablecoins are no way any close to be money, to represent money. So you see that there is, from the side of the authorities, really a pushback to stablecoins, and this only has changed in the last couple of years, I think.
Mm-hmm. Just so we're clear here, I think maybe it's helpful to define what we talk about, since we'll be going into a few different aspects of this. With stablecoins, you generally, I assume from the association standpoint, think of these as fully backed digital tokens representing one-to-one with the fiat money, so backed by cash or cash equivalents in a fully backed situation, not deposit tokens or commercial bank money on the blockchain. Is that correct?
Yes. I mean, the backing, the underlying reserves, I mean, there are some different concepts to it, but it's really the promise to at the redemption to have 1 unit of what you peg the stable coin to. This can be $1, this can be a Swiss franc, or even some commodity or something else. Whereas the deposit tokens are simply deposits, bank deposits. They lie with the banks, and they just come in a tokenized form. And I mean, we've had some people on the podcast also talking about stablecoins who theorized that you could say that stablecoins are an upgrade when it comes to money, right? Because this is not commercial money issued by banks, against deposits and against their balance sheet and assets, but it is actually backed one-to-one by something in some form that's auditable in some vault somewhere, and therefore it could be seen as a superior form of money. Is that a fair estimation? Is that something that people consider or not? Well, whether it's superior is probably depends on the design, and it has, and the stablecoin is designed to have cash-like properties. So we should not maybe compare stablecoins to tokenized deposits or deposit tokens, but to cash. And maybe something else is it needs new rails. I mean, it's the stablecoin is one thing, the coin, but probably it's we should talk about the infrastructure, because we need some payment infrastructure, DLT based payment infrastructure. So I think if we are talking stablecoins, it's more than just the coin and the value of the coin. But of course, this is what comes into your mind when you first hear the term stable coins. Yes, it's all about stability. But of course, if a stable coin is too stable, then of course it's a competition for the deposits. So. So it's really how to find a design that serves the purpose of adding value to economic value for the digital economy, but not disrupting the traditional finance rails.
So when we talk about stablecoins in general, and we'll dive into it, we could say there's some aspects around the construction, just as we talked about, but also then the denomination. U.S. stablecoins, which have dominated, Swiss franc stablecoins, Euro stablecoins, and so on. Just staying quickly on the construction, in the DLT or in the new proposals from the regulator around stablecoins in Switzerland, this puts some burden on banks who want to issue a stablecoin, right, with a fully separate company and some of those. Can you just give us your opinion or your perspective, the association's perspective on those proposals in particular?
Yes. So in general, I mean, we welcome these proposals because it's important and entities that want to issue stablecoin in Switzerland are allowed to do so. I think that the push for this amendment of the Financial Institutions Act is important. Now, there are 2 or 3 instances in the proposal that we criticized as a bank, as a bankers association. For instance, it is not conceivable why a bank is not allowed to issue stablecoins, but just payments instrument institutes are. So you need a special license to issue stablecoins. So that's one of the criticisms that we make. There are other points that we raise, but generally we are happy that finally this goes ahead. We are very. We have a lot of respect from the political discussion because this is a very complicated topic. And if we think that the 246 members of parliament have to take the good decision, and our task is to explain them what's good and what should be in there and what's not. So this will be a very, very hard task, because you could even think, oh, you're trying just to put new money in order to eliminate cash, or something really irrational. So we don't know where the parliamentarian debate will lead us to. But big respect for explaining all the details about underlying reserves and stability and all the conjectures that we have to make for the future.
Sure. I mean, I'm not at all going to attempt to step into the mind of legislators or regulators or whatever, but just thinking about stablecoins in that fully backed form, that construct, so to say. I mean, that means then holding lots of assets to back whatever you issue as a stablecoin. And maybe you can make the argument that that's, balance sheet, safety, security, and so on, as additional risks, whatever. With a deposit token or a tokenized deposit, we'll get to the definitions of that in a little bit, maybe. But that doesn't involve holding huge reserves. And as I understand, banks could have done that even under the DLT Act for some years, but didn't take that path. Maybe.
Yes, yeah, absolutely. I mean, it is our proof of concept on the deposit token has shown that it would be perfectly fine and it's absolutely legal and safe, legally safe to issue deposit tokens. So no problem from that side. Now, of course, a deposit token as any transfer with as any bank transfers today, they are settled via the Swiss interbank clearing, the SIX system that is put onto the Swiss National Bank. So, and here, as long as the Swiss National Bank is not blockchain ready, then there's no point in constructing or in issuing a deposit token.
So we need to talk to some of the people over there at the Swiss National Bank to move them along. Just saying. So that would be the big blocker, you think, generally for banks?
It's not a blocker. I think we're in contact with, and we have been in contact with the Swiss National Bank, and they have also had a lot of speeches and publications, and they are also involved in the BIS Innovation Hub prototypes and the projects. So I'm very happy to observe that the Swiss National Bank is ready and willing to support any development and any innovation in the payment system. After all, it's their legal duty to facilitate cashless payments. So they are just living up to their duty, and this is wonderful.
Let's go back now then to the denomination topic around stablecoins. We know that the market generally, globally, for stablecoins is overwhelmingly US dollar based, and that's been for some years slowly changing, but not too much. I mean, if the entire US dollar or a large part of the US dollar financial system goes tokenized with tokenized US dollars, and it's not so much the Swiss franc, euro, and other coins, from an economics standpoint, what would that mean for the global financial system? Well,
what you're alluding to is about the dollarization of the economy, of the Swiss economy. And I think this would be a minor problem for the Swiss banks, because Swiss banks, they could just try and catch those stable coins, convert it to Swiss francs, and cash in the forex conversion fee,
which right now is quite okay,
which is okay, and then try to get a new customer base. But for the large of the economy, it would mean that whenever you have a trade or a service being paid in US dollar, even if it's among Swiss, then the payment would involve some currency risk, and every risk is just an increase in cost in economic terms. And of course, as when the economy, the Swiss franc-based economy shrinks, then of course also it makes the life of the Swiss National Bank to implement its monetary policy much harder, because it's entirely Swiss franc-based.
But you don't see particularly a risk in everything US dollar being in tokenized form. In other words, much cheaper to operate with, maybe moving much faster, whereas in other Swiss franc, euro economies and other things, it's not tokenized, and therefore you have kind of these two speeds, so to say, in movement of money. Is that a consideration?
I mean, for the moment, even the largest stable coins like Tether, they are small in terms of amount of payments for real value transaction, for real economy transaction. I mean, there's much in the crypto space, yes, but basically this is anyway dollar-based. But when it comes to real economy transaction, then there have been some sizing exercises by different analysts. It's still small, so it's not to an extent that this would have become systemic already. But of course, I mean, we have to look at the trajectory, and so the fact that we are not there where US stablecoins are is no problem in the future, but could be if we don't enter that market. Now, what we see is that the Swiss franc stablecoin exists. It has been issued abroad by All Unity. There's the Franken coin in Switzerland. So there are proposals, and rightly so, because obviously there seems to be a demand for it, and policymakers and then ultimately also financial institutions are called upon to issue stablecoins out of Switzerland.
So that competition from outside of Switzerland, in your opinion, is a good thing. It's not something to be upset about or to moan about in one sense.
It's a natural thing. It's a good thing because it already helps to accelerate digital economy, I think so. But as always, I mean, of course, you could imagine we have 100% of the cars driving in Switzerland, they are produced outside. 100% of the computers in Switzerland, they are produced outside Switzerland. So you could ask yourself, what's the problem then if 100% of the Swiss franc stablecoins are issued from abroad? So I think there are like two issues to be considered. So one of the issues is how can we present us as the most innovative front runner in financial markets and then not be able to produce stablecoins? I mean, there is a reputational issue, there's an economic issue that these jobs are not in Switzerland. And then maybe another thing is from the perspective of supervisors. I mean, if something goes wrong with a Swiss franc stablecoin issuer abroad, then we will just be in the passenger seat and just observe, I don't know, a run on stablecoins. Whereas if we have FINMA looking at an issuer according to subject to Swiss rules, of course, very early on we would have the information if something goes wrong and then could implement corrective measures. So it's also a matter of safety and stability.
For sure, and quite political in that sense. I mean, leaving aside the whole Rahmenabkommen discussion about Switzerland and EU, also military with the United States, having something that affects your own money in your own country would seem to be advantageous and better than having it in some other country where, as you say, risks could develop without any control or supervisory function. Just going back to something we alluded to quite at the beginning of the episode, I mean, talking about crypto being kind of a step into tokenized assets. You mentioned the real economy with stablecoins, and it's true, maybe not many people are buying their coffee with a stablecoin. And yet we do hear about, especially in the United States, tokenized assets, tokenized repo markets, issuers of their own stablecoin or deposit token like JP Morgan, who are developing whole mechanisms around that. So stablecoins being the cash leg of some of these bigger financial transactions, that's picking up quite a bit. DTCC in the United States, the clearinghouse, is planning to go live with trading of tokenized assets later this year. I mean, that's something that Switzerland wouldn't want to miss out on, I suppose, in the future of development of innovation, correct?
Yes, absolutely. I mean, I think cash leg of digital assets, since our very first papers and analysis, this always has been a use case, and it continues to be a use case, I think so, because this is really where a lot of efficiency gains are possible. Now the question is, the cash leg, should it be a stablecoin or a deposit token? Because there are certain use cases that you could use both types of digital money. But yes, I mean, this is one of the obvious use cases for digital money.
And then just to say, I mean, the numbers that come out of the United States, everything, many things in the United States are bigger, so that's not surprising. But these are billions per day on some of these tokenized repo platforms that are being done, and at a certain point, scale really develops. So not something probably that you want to wait too long to get working on. I know UBS, Signum, Postfinance, Raiffeisen announced their kind of sandbox that they're looking at for different use cases. Do you have any insights on what particular things they are looking at, or what would the association want to see come out of a sandbox like that?
I do not have more information on this as the communiqué says, so I have no idea about the use cases. I can say that at the proof of concept that was performed last year on the deposit token, we were like at the helm of this initiative. Now, as things move into building stuff, we don't have the resources, nor the knowledge, nor anything else to contribute. We have to see that we fulfill our mandate to defend the interest in terms of looking or contributing to good framework conditions. And so therefore we are happy to see that this is going on, happy to see that we can help also to get the legal provisions right. But of course it would be it's our mandate does just not allow to do anything that has to do with market activities.
Mm-hmm. Mm-hmm. So there haven't been kind of more general discussions in the association of, well, if we had a really good digital blockchain-based cash, like we could do this, or a lot of costs could be eliminated on this side of things. More generally, there haven't been kind of analyses or something like this around that.
In our papers, in our analysis, yes, we have talked about the use cases, about the different use cases, but the number crunching really has to be done within the banks.
Sure, yeah. When we come to just before we go into the POC, of course, around the deposit token, one big debate right now, especially in the United States with the Clarity Act, is yield on stablecoins. Yeah, what would a Swiss Bankers Association think about giving yield on stablecoins in some form? Would that be advantageous? Would that be problematic? And would that perhaps push Swiss banks more towards a deposit token which they control and which would not be issued by, other private issuers in some sense?
Yes, yield is, I think, a critical topic.
Mm-hmm.
And the current law proposal says there cannot be yield on stablecoins, which is understandable from the standpoint that, after all, it's cash. Otherwise, it would be an investment. So it depends. Then it would move to tokenized money market funds. So and you can pay yield, but it has to become in a coherent setup, and you have to know exactly what you want to achieve with this new form of token. Mm-hmm. So if it's really tokenized cash, then if there's no yield, it's understandable that the proposition is the law proposal is proposing this.
Mm-hmm. And tokenized deposits with some kind of yield aspect, would this be interesting for banks and developing a digital economy more?
If we were not in a 0% yield interest rate,
or Swiss money market funds.
Yes, no. Deposit tokens are just deposits.
Yeah.
So you would earn probably the yield that you would have on a normal bank account. Mm-hmm. So there's no difference in this. Now it's zero by economic conditions.
Right. There are quite a few money market funds being issued by different people, and most of them, again, are outside of Switzerland. If people are looking for yield in some way or form, very often they will find a way to it. Is that disappointing or problematic that, again, innovation is happening over here with these tokenized money market funds, not necessarily yet in Switzerland, or?
I think when it comes to funds, we are used to, and also that was in the case with mutual funds, we are used to losing business to other countries, and of course we should do everything to bring it back here. Of course, we just need the right framework condition to make a scalable proposal. And a cost-efficient proposal, and then it's the market that decides where it wants to buy the investment.
Mm-hmm. So let's go now to the deposit token POC, and maybe in two steps you can explain to us your perspective on deposit token versus tokenized deposit, and then give us kind of a rundown of what you did with the POC and how it worked.
Yes, so you were asking about tokenized deposits versus deposit token. I mean, it's all about terminology, and I know most people use it as synonyms, so no problem with that. We just need to agree on what we're talking about. Now, we understand that deposit tokens is the liability of a bank, and the authoritative record is on chain. So whatever is written on the chain, when it comes to some legal litigation case or something, you will look at the record on the chain. Whereas tokenized deposits, the authoritative record is in the bank's core system. And then it's just a representation that is made available on-chain in tokenized form to do whatever it's supposed to do. Mm-hmm. So basically is, where does the authoritative record lie?
Mm-hmm. And so then maybe you can talk through how you set up the POC and what exactly you did in the project.
Yes. So what we did in the POC is we want to see whether it was possible to transfer deposit token, to make a payment with a deposit token from person A, customer A of bank A, to a customer B of bank B. So, and we did a second use case with escrow and programmable escrow in it. And the result was that technically it's feasible. And it was also feasible on a legal basis. So even today, we could, from a legal perspective, we could start building deposit tokens. Now, what we did is, since the Swiss National Bank is not yet, or has not been blockchain ready, of course, then we had to do some kind of trigger solution, and the settlement with central bank money would be on the traditional rails via Swiss interbank clearing. So, of course, this is a setup that
wouldn't be used in real life.
No, it's absolutely non-scalable. I mean, one transaction lasted like 10 minutes. Mm-hmm. I mean, this would not be scalable. It was very resource intense, but that's what the proof of concept is for. I mean, it's to learn, is it possible? And then where should we turn the screws for the next steps? And we identified like 3 questions to address. So the one I already mentioned, it's all about how does the Swiss National Bank deploy central bank money on the blockchain. Then second is how to, and we did not do this, how to ensure privacy on a public blockchain. Of course, we still have the Swiss banking secrecy, so somehow we have to come up. We have not tested this. And then we call it the deposit token POC, but in fact it was a tokenized deposit. I mean, it was not, the authoritative record was not on chain.
Mm-hmm. But you would have preferred to do that kind of a setup, or was it a conscious decision to do it this way?
No. I mean, this was intentionally done so because if you're running a POC with a certain amount of resources within a certain amount of time, you don't want to make things overcomplicated.
Mm-hmm. Mm-hmm. And so what was the general reaction, shall we say, from other banks, from the central bank, and then more generally from the market?
I mean, from the central bank, of course, I mean, you have to ask themselves, but I had the impression they were very interested because also from a central bank's perspective, I guess, as from a banking perspective, you probably would prefer deposit tokens over stablecoins in terms of disintermediation risk, in terms of financial stability risk. So whenever they serve the same purpose, mm-hmm. you probably choose the deposit token. Mm-hmm. So of course that's why I guess intrinsically they were very interested. And from the other banks, of course, we started out this priority. I think it's the fourth year that digital currencies is a priority of our association. And of course, as I said in the beginning, at the beginning we had many interested banks, and now we have many banks, they say it's important. So I think this shift really was observable.
Mm-hmm. Just one or two details that I noticed reading the report after the POC. You mentioned the CBDC integration, which would be very important. There was some mention also of governance, and I'm sure you didn't think really globally about how this would work in the real world, but in some kind of a multi-sig setup between banks, this would require some development or integration. Although with so many banks already working with crypto and many of them with their own crypto custody solutions, maybe they're actually farther along to working with something like that than we think, or what do you think about?
I mean, what needs to be done, and we see also, I mean, these projects done at the BIS Innovation Hub. I mean, it's all about how to make these tokens that are issued by each individual bank interoperable, mm-hmm. both nationally and internationally. So, of course, in terms of transferability, stablecoins have an advantage because I just can send it to you. Mm-hmm. Whereas if you want to send deposit tokens and they have to be settled in central bank money, you need a solid setup on the governments. That's right.
Mm-hmm. And you said you did this on a public blockchain on Ethereum. This would be your preference going forward, probably, to continue to use that kind of an infrastructure, or?
I think public blockchain is the future. I mean, of course, now when it's tokenized deposits, it's a permission blockchain because you have to it's bank customers, you have to identify them. I mean, this is one of the advantages of tokenized deposits against stablecoins is like the whole KYC process is already in place. Mm-hmm. So here we are really on the safe side. But I think there is, I mean, unless the banks decide otherwise, but I think from the outset we were very keen on putting this on a public blockchain.
Mm-hmm. Very, very interesting. Maybe just to finish up, you said things are already at the quote-unquote important stage when it comes to stablecoins and digital currencies with Swiss banks. If you look again ahead 18 months, 2 years down the road, will it be already to the critical level, or where do you think this is headed in the next year and a half to 2 years?
So I think with stablecoins, it depends on how legal work is going on. If we get stuck there will not be any Swiss stablecoin. Mm-hmm. I mean, it's as simple as that. And from the side of the deposit tokens, I think if banks decide to go on and if they find an agreement, they can solve these three issues that have been raised in a proof of concept, then I'm confident we can get one step ahead. Mm-hmm. But of course, I mean, as economists say, projections are very difficult, especially if they concern the future.
For sure. And to quote Adam Smith, the invisible hand may have something to say in all of this, so let's wait and see.
Okay.
Martin Hess, thank you very much for joining the podcast. Look forward to speaking again sometime very soon.
Thank you very much, Ian. Thank you for having me here.